Hello everyone, welcome to Master Stage. And today we are going to discuss LLB third sim, in which we are going to learn about the company law, where we'll discuss about the company's dissolution process and various things which is related to them. So the main points here: corporate accounts, audit and governance. So let us understand the framework of legal framework for company management, restructuring, dissolution under Indian corporate law. So the main focus is on here. The topics will cover accounts and audit, where inspection and investigation process, then restructuring. Okay, if the company goes losses, then compromises, reconstruction and amalgamation, then shareholders right. So majority rule and minority protection, then how to wind up the insolvency procedure. This is dissolution we are going to discuss. So if you are newly watching my channel, please do subscribe and share with your friends. So uh, if the company goes loss or something went wrong, then the shareholders step in. Okay, the majority rule principle. That means decisions are typically made by majority shareholders, but the powers come from the responsibilities and limitations. So minority shareholders right, protection against operation and mismanagement, class action suits for collective grievance, right to challenge unfair decisions, and access company information. So this is the thing where shareholders' rights and protections. Okay, so majority rule principles works here. Then, if the company goes sick or goes something wrong, okay, then some of the rehabilitation plans are there in order to revive the company. Okay, first they will identify the company which is sick. The company identification: company declares sick when accumulated losses exceeds the net worth. If the huge loss is occurring, then that become sick company. That is going to be identified as a sick company which need to be revived. So assessment, they are going to investigate financial health and viability of that particular company. Then rehabilitation. So in order to make survival that particular company, they're going to make some revival schemes and restructuring plans. Then recovery. So they are going to, once the rehabilitation is done, they are going to monitor how it is developing. So whether the ensuring that whether the plants are working, whether the operations are working properly or not, whether management is doing fairly or not. So they will monitor the recovery. So revival and rehabilitation of sick companies: first they identify, then they assess, the assessment, that means evaluate, then rehabilitation. They introduce some of the schemes to uh, again survive that particular company. Then recovery. So they will monitor progress and ensure that there is a sustainable operations. This is a revival and rehabilitation of sick companies. Then mergers, amalgamation, and takeovers. So these are the types of corporate restructuring. Okay, merger, like when two or more companies, they come together and form a new company, that is called merger. They are clubbing two or more companies, they become new brand name, that is called as merger. Amalgamation means, so one strong company absorb the another. Okay, the exist one is going to be, the previous one is going to be, uh, the name will be removed and it is going to be amalgamated with the particular company. Okay, then takeover, that means acquisition control of the interest of the target company. So some big company will take over of the other company. So the types of corporate restructuring is merger, amalgamation, then takeover. These are the thing. When they are asked about the mergers and amalgamation, you have to write these points. Then how to wind up the companies. So it is a this winding up of company called as dissolution, dissolving of a company, and they distribute its assets and they repay the debts which is owed by the company. So the legal process of dissolving a company and distributing its asset. So one is compulsory winding up, means compulsory closing of the company. Second one is voluntary winding up. That means so it is members or creators voluntarily liquidation based on company's decisions. So compulsory winding up done by the various tribunal, so ordered by the tribunal due to inability to pay debts or just and equitable grounds, they're forced to close that company as per tribunal's order. Then voluntary means the members themselves or creators themselves voluntary sell off their assets, sell off that company's asset based on company's decision. So winding up of company, two process. One is compulsory winding up, another one is a voluntary winding up of the company. Then Insolvency and Bankruptcy Code 2016. Simply we can say that IBC, Insolvency and Bankruptcy Code. First, they have to initiate in this particular thing, they have to file the petition to start proceeding. Then appointment, so they will appoint the professionals in the for the insolvency. Then take the resolution, corporate resolution process. Then liquidation, if the liquidate if the resolution fails. The key features are, it is going to be liquidate, mean it is going to be insolvency. It will take 180 days to 270 days. So it is a creditor driven framework. So moratorium on legal proceeding, then priority to resolution over liquidation. So it is a IBC, that Insolvency and Bankruptcy Code provides a comprehensive framework for resolving insolvency, and company is going to be wind up or closed uh, efficiently. Okay. Then regulatory authorities under this act: NCLT, NCLAT, that is National Company Law, and tribunal and appellate. Okay. The tribunal handle the company law matters, that is NCLT, and NCLAT is going to handle the company law matters, and regional directors and ROC, that is regional directors and register of companies, oversees the compliance as per the law. Then some investigation goes, that is a serious fraud investigation office, investigate the complex of the corporate frauds, any corporate law, any fraud is there, that is investigated by the SFIOs, that is serious fraud investigation officers. Okay. Then advisor boards, so public trustees and advisors committees and expert guidance and will be taken. So these are the regulators authorities under this act. Okay. Then corporate governance and framework. So what is the principles? So they see that corporate governance, how to run the business. So mainly they see that the core principle that the company should works in a transparency way, and there is no fraudulent something, and the company should be accountable to the shareholders. Okay. Then fee treatment to all shareholders, equally treated, and right information given to the shareholders. Ethical business practices, not to cheating, not to do inside trading. Okay. Then effective board oversight, so the board of directors should be work properly. These are the core principles of corporate governance. Then pandemic relaxation, some of the relaxations is given during the special provisions introduced during COVID-19. Okay. So like after COVID 2019, so instead of attending personally, the shareholders can attend the meeting virtually through Zoom meeting, something like that. Then extended timeline for compliance. If something is there, they will give some proper time. relaxed requirement for certain filings, so flexibility in conducting annual generals meeting. So these are the corporate governance. Some of the leniency is given after the pandemic happened of 2000 COVID-19. Okay, so these are the core principles. This is a pandemic relaxation. That means after the COVID, some relaxation is given. Okay, then what we will learn today. So here, uh, like comprehensive legal framework, Indian corporate law provides detailed mechanism for companies management, restructure and dissolution. Then stakeholder protection, maybe bankers, maybe investors, maybe creditors, maybe suppliers. Okay, so they are going to be prevented from the oppression and mismanagement. Okay, then modern insolvency system. So IBC 2016 revolutionized the insolvency resolution with the time bond and creditor driven process. Then adaptive governance. So corporate governance framework remain flexible and addressing emerging challenges like pandemics. So these are about the corporate accounts, dissolution process, corporate governance. So we discussed, okay, just what is merger, what is amalgamation and takeovers, types of corporate restructuring, then revival and rehabilitation of sick companies. Okay, then shareholders rights and protection. So these are the covers we discussed: accounts and audit, restructuring, shareholders right and dissolution process. Go through this particular video again and again, then that will be helpful to you score good marks, and at the same time you're going to have command over this particular subject. So all the best for your coming examination. Okay, do prepare well. So we'll meet with the next topic tomorrow evening. Thank you.